Nasdaq comp daily chart. We've come up 3 days off the bottom. We put the bottoms in down here on that knife hook. This was the breakout day, the secondary narrow range day on Friday, and the third day being today, so Thursday, Friday, and Monday. The declining 10-day simple moving average, and we got oversold down here in the short term, and the upside volatility plays itself out. There's a slew of economic data coming out this week. It's very important to understand that the amount of selling that we experience up here and the kind of volatility that we experienced is that we were putting the bottom in on the market. We confirmed that bottom on Thursday. The 10-day moving average has crossed over. All of these are what we call bear market upside volatility reversals. Let us keep it that way. Let us clearly understand that for the people, MMTs, you already know because you're in the school, but any innocent bystanders is to know that the neckline is going to be right here. That's where we're going to hit resistances in there. Standard stuff is how the public is going to react to this other secondary neckline right here. Comes right across there. That's going to be resistance 2 and then resistance 3. What happens in the dog days of August, we got sold out. Margin debts got called out. Everybody got whacked selling at the bottom. This is a bear trend reversal, upside price volatility. The downside volatility from the top reversal was very, 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 very great for our shorts when we called those. Now that we're at the bottom, and we confirmed it on Thursday and started buying that bottom, is we had them want to go long over the weekend. We've had them come back. Tomorrow, there's going to be headlines out. PPI, CPI is coming out this week. There is a major thing that will happen at these resistance levels. And upside volatility is to be sold short at those levels, and we would look to see where the reversal levels come in. We're way up here. The 20-day moving average has crossed over all your other simple long-term daily moving averages. There's a mathematical equation between it. So you need to know that when that upside comes there is why you would be selling into the upside of upside volatility. Not so much I want to hold on to it, but how to sell into it when you're buying these bottoms. That was that 3-day bottom process, and that's a 3-day burn. That's resistance level here, resistance level right below the 20-day, and resistance level third. Selling short at these key levels. Intraday high reversals within the daily trade management structure is what we do every day here, and how nice we're doing it. The thing about it is people don't know when volatility bottoms change. Low volume volatility to the upside versus high volume downside price action volatility. The thing about it is knowing when to sell into the move, and why, and when, and where that money is going to print once that this initial beginning bottom that we called last Thursday, and we're 3 days into it. What does it look like on the 4th and 5th day, and or does it consolidate, or does it gap and break down? We'll take a look at that on a daily level. Any upside is to be sold short on intraday highs within using the index structures, MMTs.